please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Good morning, and from all of us at CNBC TV18, here's wishing every one of you a very happy Diwali. May it bring you a lot of success, a lot of wealth, and a lot of true happiness.
Oh yes, happy Diwali to you, Lata, to everyone. In fact, in South, they celebrate Diwali today.
Yes.
So happy Diwali to all our viewers in South. In North, of course, we call it Choti Diwali. So for everyone up in North, happy Choti Diwali, and of course, season's greetings to everyone. Surabhi, good morning, happy Diwali.
Good morning, Anuj. Good morning, Lata, and happy Diwali to both of you as well as to our viewers as well. And Anuj, you're right. Choti Diwali it is where I am in Delhi, but there's nothing choti about it. You know, the celebrations are all around. You can really feel the festivities in the air.
Oh, right. Well, after those initial warm words, I do have to bring in a bit of reality touch. Well, today's Diwali, you would get the sense on the markets that perhaps we peaked a little before Diwali. Today, the festivities could be marred a bit by what we got from Axis Bank. And let me just put a little bit of numbers and get back to ground reality. The Reserve Bank has told Axis Bank to identify 5,600 crore of accounts as NPAs as of last year, March 31st. Now, what Axis tells us is that this 5,600 is a part of 40,000 crore of loans which are across 9 banks. So if RBI has told Axis to identify these as NPAs, the remaining 34,000 crores will be sitting with other banks. And therefore, Axis's pain could be other people's pain as well. It will definitely be Nifty Bank's pain, and to a lesser extent, Nifty Spain. I'm sorry to start this on this note, but that could be the reality, Anuj?
That could be the reality, Lata. But, you know, since you started on a negative note, let me just
add positivity.
Just a bit of positivity. I don't know, it could be Mumbai specific, but yesterday, you know, in the evening, I went to my local market for Dhanteras shopping, and I can tell you that the retail mood, it could be Mumbai specific, and I, you know, I'm not
it could be across.
Yeah, but it was definitely far better than last year, and you know, far better than the kind of noises that we're hearing that it's going to be absolutely a dud of a Diwali for retail. At least that sentiment was not there. I think I will take that positively. But having said that, I think the SGX Nifty is indicating a bit of a weak start, perhaps on Axis numbers, and I take your point completely. It's not just Axis's pain. If that was the case, look at the ADR performance yesterday. ICICI ADR was down 2%. That's straight, you know, read through from Axis. HDFC Bank ADR was down 2%. HDFC Bank ADR was down 2%. Why would HDFC Bank ADR go down 2%? And if HDFC Bank ADR performance is repeated here, you're looking at a 200, 300 point downtick on the Bank Nifty straight up. And also keep in mind, though today is Wednesday, but because tomorrow the market's not trading for the full day, today is the weekly options expiry on the Bank Nifty. Okay. So what we have right now is that the first hour on the Bank Nifty today is key and crucial. You mark out the low of the first hour today on the Bank Nifty. If between 10 to 11 you take that out, I think you're looking at a trend day. But if the morning low is respected, in that case, I won't be surprised if you start to see buying even in Axis and at least a couple of other banks. So I think it's going to be an interesting day because there's just too much liquidity, and now once again you're looking for dips to buy. This could be that dip that could be used to buy, at least on the Nifty, because Nifty is fine. And in fact, the Axis weakness, because it will reflect on the Nifty as well, that may be used by some of the traders to actually buy. Because now you have firm leadership. You know, Reliance is clearly the leader. Bharti Airtel is a close second. So I think you got some of the gainers here. What may happen is that over the next couple of days, as you said, maybe we peaked out a bit too soon. Maybe Diwali day would have been the day when you hit new highs. Maybe the mid caps and junior, they close the gap, while the Nifty does not do too much from here. Nifty consolidates a bit, maybe sees a 100, 150 point or maybe 50, 100 point decline, and then makes a, you know, a dash towards new highs. As of now, it's made higher high and higher low. So the template is very simple. Use the weakness to buy. On the Bank Nifty, I think the jury is out because today is expiry as well. You would want to see the first hour low being respected, and I think if that is respected, then we may have some good trade going.
No, fair point. Going by the way the economy is otherwise firing on other cylinders, like we saw the export numbers, like we saw the IIP and core numbers, it's quite possible that investors just ring fence the decayed portion or the legacy problem in the economy and in the banking system and go ahead and buy the other sectors that have come out of those problems or were never in problem. But good morning, Surabhi. Don't feel left out.
No, not at all. I was listening to both of you, Lata and Anuj, and I was just sort of looking at what global cues are telling us this morning. Not that they've been very relevant, but it's win some and lose some, because the argument being made that it's all equity markets pretty much around the world that are going up, including the mother market. So you've got a 23,000 on the Dow overnight. That positivity is continuing. So Asia is still holding up steady. The only niggling worry, and that's what I've been looking at past couple of days, is how Brent is moving back closer to the 60. The range has been between 55 and 60, and now we're closer to the upper end of the range. So that's the only niggling worry in terms of the global setup. But otherwise, at least from that standpoint, we don't have much to worry about. I guess, Lata, I mean, you started it off. I think the talk is really going to be dominated about this asset quality issue with Axis and other banks, and whether, as Anuj said, Reliance can actually be a counterweight to that.
No, Surabhi, you're touching a very important point. A higher crude price at 58 is going to have some pain on some of the stocks, even for that matter, marquee stocks like Asian Paints and the painting space where crude becomes a raw material. So take it away. You have other expert opinion as well?
Absolutely. So let's get going with the morning calls and what our wise experts have to say about trade as we get set for this morning. Ravi Sundar Muthukrishnan of Elara Capital says, post the strong rally, India's equity market appears to be expensive. Nifty's forward price to earnings stands at 20 times. The elevated Nifty forward PE and the run-up in the prices has kept investors guessing on whether high valuations are justified and if upside exists from current levels. That too compared to some emerging markets which look cheaper. Within their coverage universe, Elara believes stocks like Blue Dart, Cipla, Motherson Sumi, Maruti Suzuki, UPL, Engineers India, Bharat Forge, Aurobindo Pharma, Britannia, Cummins India, Container Corporation of India, Bharti Infratel, Supreme Industries and Sun TV can provide some upside or a margin of safety.
Mr. Muthukrishnan has a fairly long list of mid-caps largely, and they might outshine today. Money market views come from Pramit Brahmabhat of Veracity. He says 64.80 coincides with resistance for the rupee. Trading range for the spot USD INR pair could be 64.80, 65.20 today.
And on the bond market action, Dhaval Dalal of Edelweiss says government bond prices came under pressure after reports of a drop in the government's indirect tax revenue collection. Those comments, of course, being said in the GST town hall on this very channel. Now, they're expecting the benchmark 10-year to trade in a band of 6.7 to 6.8% in the near term.
Okay, over to Mangalam then for the world view.
Well, looks like early Diwali on the Dow Jones as well. Anuj, Dow touched 23,000 in yesterday's trading session, closed at a record high, though it ended just 3 points shy of that big mark. But just take a look at Dow's journey from 22,000 to 23,000. The stocks that contributed the most, we had an aviation stock, Boeing, we had Caterpillar, we had Home Depot, which is a retail company, and we had Goldman Sachs, a financial company. These four stocks accounted for nearly 40% of the 1,000-point gain. The earnings beats also continue. United Health and Johnson & Johnson posted better than expected earnings, so those stocks were higher in trade as well. But that's where the green ends, because if you take a look at the European markets across the Atlantic, we saw mild red out there. One thing which could do well is Danone. That one beat earnings estimates, and there was a demand rise in China. So consumer companies doing well out there. Boeing gained, so Airbus said, why not me as well? Airbus gained 4% as well on the back of an acquisition. Across the periphery too, we saw red in the ATHEX as well as the Italian index. The Spanish index, though, outperformed, paired some losses after the uncertainty hullabaloo taking place out there. In the emerging market space, a near 1% cut both on the Russian as well as the Brazilian indices. Asian markets, though fairly resilient, not moving too much. All the three frontline indices. Shanghai, remember, there is this big political meeting underway out there. What does that mean for the SGX Nifty? Well, indicates a tepid start to the tune of 30-35 points in the red.
Okay.
Wow. Okay, red. Sorry.
Yeah, 35 points. You know, I just want to make one point, Lata, though. You know, the Dow hit 23,000,
Yes.
but over the last 4 or 5 days, the Russell 2000 index has fallen 1%. So it's just been a bit of a, you know,
separating the men from the boys
issue,
kind of
even in the US market.
Oh, right. Well, it's Happy Diwali, and we have a very important guest with us. I would say an old friend of CNBC TV18, Arvind Sanger, managing partner at Geosphere Capital, has joined us. It's a very important day for us, Arvind, and thank you very much for staying up for us. Very happy Diwali to you. But to just
happy Diwali to you and your viewers.
Thank you so much, Arvind. Well, the Choti Diwali, as Anuj has been saying, has struck a note of reality touch with the Axis numbers. Do you think the dip will be bought, or do you think it's going to keep us a little subdued?
Well, I mean, I think the reality is that the earnings season is not one that we are expecting to be a big catalyst for the market either way. Clearly, this is still a transitional quarter. This is a quarter in which, some of the banking sector, as Axis is showing, are still struggling with their debt problems. The demand for credit from industrial users, from businesses is weak, and SMEs have been particularly pressured, which we'll continue to see probably in some numbers. So this is not a quarter that is going to be a quarterly earnings catalyst. I think what is more important, to be perfectly honest, that other than seeing some signs of improvement as we've seen recently, and some indicators like IP and auto sales and what have you. Other than that, is going to be getting more clarity on how GST kind of early hiccups are being handled, and those are more important than this quarter's earnings. So I think yes, there will be some volatility around earnings, but I don't expect that to be with the market where it is. Earnings are not going to be the catalyst that that we can count on to take it much higher at this level. This quarter's earnings, at least.
Okay, that's nice to hear, Arvind. The season's greetings. In that case, do you get a sense that the liquidity will just outweigh every other negative cue and just keep taking this market higher? The last correction that we had, and we thought that was a genuine correction, lasted all of 5%.
Yeah, it's quite amazing. And I think, again, I think you were talking about this a few minutes ago. It's a global phenomenon. We're not seeing, I mean, if you look at, the U.S. market as the kind of leading bull market going around the world, we have not seen any major correction in a long time, and volatility and risk premium are at historic lows. So what you're seeing is a risk-on appetite and liquidity flowing into equity markets globally, and India is certainly no exception. And in India's case, clearly the domestic investors have stepped up dramatically, even as FIIs have at points in time tried to take chips off the table. So I think that this liquidity flow is one that is pretty breathtaking to watch, and I don't see it showing any signs of slowing down yet.
Arvind, good morning, and wish you a very, very happy Diwali all the way from New Delhi. That's where I am today. I just want to come back to the point on Axis and how this is going to be interpreted. Now, to be fair, that's one stock that's not gone anywhere. It's been very, very range-bound. So can the market and foreign investors be charitable and say, I mean, these are legacy issues. We know that these are old accounts with problems. So therefore, you give it to the bank. The stock hasn't run up. Or could this be fresh impetus to sell down banks in India, particularly some of these large corporate banks?
I think you make an excellent point. The reality is that, banks like Axis and ICICI and some of the PSU banks are anyway not the engines of this bull market. So, whether or not you want to bottom fish on these as value plays that eventually will work, so far that bottom fishing has not paid off. But, you look at some of the other NBFC results, and they're fine. And we'll see more of the NBFCs. Those have been high flyers. So I think in the sense, the market is clearly bifurcated between the haves and the have-nots. And as long as the have-nots and the HDFC banks and a lot of the NBFCs, if they keep delivering, and Kotak Bank and others, I don't think the market's going to get too upset about an Axis or some of its, more corporate peers who have been trouble for a while, lagging. The only question is at what point do people start chasing after these laggers? And it sounds like this quarter doesn't give us an all clear. It may get a trading, volatility, and maybe some people buy it. But to get a real move on this stock, we're going to have to see better clarity.
But Arvind, it's, another month, another high as far as markets are concerned in India as well as in the US. So, you know, 2 weeks back, one would have thought that, okay, I'll buy when the market goes to 9,800 or 700. Now you have to say, I'll buy when the market goes to 10,000 or 10,100. Can it go on like this?
It's a good question. I think it certainly is one that is a bit of a head scratcher for us, that this liquidity creates challenges in terms of finding good value because the market's not giving us a chance. And as we've been talking about Axis and others, where there's value, there is no visibility of improvement. So I think that one of the challenges we face is, do you take a leap of faith and buy those that are struggling and make the bet that in the next 3 or 4 quarters things will improve? And I think that is certainly a valid way to do it. The other way to do it is buy the high flyers and just hope you get a modest pullback, and then you can buy a company where earnings is visible and stock is already done a lot. And I think that's the challenge that we as investors are facing, is how much of a value bet do you want to make? And to make a value bet, you have to buy companies with a lot of hair on it. And I think our position till now has been to buy the high flyers, but as we get to, or the high flyers before they became high flyers, but now we do have to dig a little deeper. And if we are not going to get a pullback, then try to look at some of these laggards and see where there might be a willingness to make a bet that the turn may happen, if not in the next couple of quarters, in the next year or so. And again, the GST situation and the bad debt situation are transitional situations. The bad debt situation obviously has lasted a lot longer. Hopefully the GST situation and its effect on the economy will last only for another quarter or so, and then we're off to the races.
Arvind, 2 stocks where, one which has been a high flyer and the other which has been a laggard but is seeing a bit of high flying off late. Reliance and Bharti Airtel. Do you think Reliance has more re-rating left in it, because that's clearly the market leader stock now? And also, where are you on telecom right now? Because we've started to see quite a bit of rally in stocks like Bharti and Idea.
Well, I think that's a very good question. On Reliance, I think the big re-rating from a long-term laggard is behind us, but that doesn't mean that it cannot continue to perform. But I think from here, performance, is not going to be driven by what happens to the petrochemical business or the refining business. Those are being reasonably valued. I think from this point, it's going to be clearly much a telecom story in terms of the incremental driver. So then we come back to the telecom sector, and the telecom sector clearly has suffered because of Reliance Jio's moves. So the real opportunity for all the players is, as you see some more consolidation, which we're seeing now, does some rationality return to the group? And I think it's an interesting question. My bet is that that at this point the pressure on the incumbents, whether it's Bharti or the others, is a story, and in that Reliance will benefit. But some of the other players, once you've already discounted for their margin pressures, will also be around to benefit. So yes, telecom is a lagging sector that is looking a little more interesting to us.
Okay. So, Arvind, what is going to be the face of this bull market now 10,000 onwards? Will it continue to be NBFCs? And if that's the case, have you liked what you've heard from companies like, DHFL, Bajaj Finance, JM Financial? There's been some nitpicking around, for instance, Bajaj Finance, whether the quarter-on-quarter run rate, that's not impressive enough for some analysts on the street.
Well, I mean, I think, we have unfortunately not been shareholders of Bajaj Finance because it's been such a great performer, but we've always had a problem with the nosebleed valuation, which frankly has turned out not necessarily to be the right call, because it has delivered in a fantastic way. But I think the reality is, yes, there will be, amongst these companies, there will be some minor reshuffling of who is doing better than the other. But the reality is the NBFC group still has a lot of tailwind. As financial, assets continue to do well, the NBFC sector, some of the brokers who have done well will continue to benefit. Some of the wealth managers will continue to do well. So I think that sector is definitely not done. Now, it's not cheap anymore, but that doesn't mean that the cycle is anywhere near over. I think the cycle has a lot of room to run. So, we like that sector. We like we're trying to figure out if some of the power-related sectors, whether there's some opportunity there. We've talked a little bit about the, hotel-related sector. Another sector that could be interesting is real estate. With the new regulations, where a lot of the unorganized players in the real estate sector are going to suffer. Now, real estate has been a very lagging sector, but you're starting to see some of the market leaders or some of the high quality names like Oberoi and others. I wouldn't call them market leaders in the sense of being the largest players, but some of the high quality players starting to perform. And is this a sector which has lagged a lot, where some of the laggards could be interesting? So I think there are sectors like this where there is change going on. There is some short-term pain, but the beneficiaries will be organized sector players who are able to weather the short-term uncertainty and the short-term slowdown and are able to emerge stronger, because you cannot have a long-term economic cycle in India without some of these important sectors like real estate performing. It may not be a high flyer, but it will still perform reasonably well.
Point taken. Arvind, thanks for those final words of, say, encouragement or optimism. Thank you very much for joining us, and have a great Samvat 2074.
Thank you. You too.
All right. So anyway, on that cheerful note, I think it's time we took a break. We're going to come back and handle the micros. Some of them are difficult ones. TV18's top 10 list of stocks to watch for the day.
Welcome back. Well, the Singapore Nifty is pointing slightly southwards, about 30-35 points lower. That's what it's indicating. But right now, let us focus on stocks. And there are several of them that should be on your radar this morning. Our top 10 list is here with the entire team. Anuj, let me start with you as always. What are you looking out for today?
So, Surabhi, this morning, once again, I'm putting my spotlight on Bharti Airtel. I mean, I spoke about this 2 days back on if you're valuing Reliance Jio according to a certain parameter and giving it that kind of valuation, then in that case, a company with a 15-year history and the largest telecom company cannot be trading at a market cap of 1.5 or 1.6 lakh crores. Of course, it's already 1.8 lakh crores now. But what has happened? Over 3 days, there's been a delivery buying of 2,000 crores. 2,000 crores of delivery buying has led to 16% re-rating. Why is that? I think the reason for that is very simple. The float with promoters and institutional investors put together is 93%. So 93% of that is literally not available to you. Rest you have 7%, out of which float with corporate bodies is about 5.4%. How much of Bharti Airtel is with retail individuals? This, I think, number is very interesting, 0.59%. I mean, of all the Bharti Airtel float, 0.59% is with individuals. And I think that's been the remarkable stat which has carried Bharti Airtel, because there's absolutely no float, and the stock's now coming out of a multi-year bear market. When stocks come out of multi-year bear market, in that case, you should not be looking at 1 month or 2 month performance like you did in case of Reliance. So that's just one stock that you now got to keep an eye on. And my sense is that every time it sees a dip, you'll see buyers in that stock. Even yesterday, I think it ended at the high point. The other one that I'm watching out for is another large cap stock, which is Cipla.
A 5% rally yesterday in the last half an hour.
Rally yesterday, and Cipla is at 52-week high. I mean, it's the first pharma stock, first large cap pharma stock to hit a 52-week high. It's not at a lifetime highs yet. Lifetime high was somewhere around 700, I think. But it's been a remarkable rally, and pharma stocks are bouncing back. Cipla, clearly the market's betting big on that stock. So that's something. And there was delivery-based buying as well. So let's see if there's any kind of follow-through on that.
Just to add a cheeky thought to your Bharti issue, Kotak has applied Reliance's standards of depreciation and amortization to Bharti, and they have come with an EBITDA that will be 31% higher and an EBIT that will be 2.8 times
which was my point on Monday as well, that if you're believing Jio's numbers and reported numbers, and on that basis, if you're giving that kind of value to Jio, 2 years back you were giving negative value to Jio, now you're giving positive value, and that too now you're giving, say, 1.6 lakh crores, 1.7 lakh crores. Why is Bharti Airtel is available at 1.8 lakh crores?
Okay, well, we have to get to the stock of the morning. Very clearly is going to be Axis Bank. Abhishek.
Well, Lata, you know, the slippages increased to 8,900 crore plus. Now, what led to the rise in these slippages? The non-watchlist slippages actually increased to above 6,500 crore. Now, what drove this non-watchlist slippages? Clearly, RBI directing Axis Bank to classify accounts worth 5,600 odd crores as NPAs. So, this is called as divergence, and this divergence has come on FY17 balance sheet. So, this 5,633 crores, which has come in as divergence, is based on 1.51% of the loan book of FY17. Therefore, you saw an increase in gross NPA to 5.9% versus 5.03% in the quarter-on-quarter basis. Across brokerages, what we are seeing is that earnings have been revised downwards, and FY18 and FY19 estimates have been cut anywhere between 15 to 35%. So, largely we have neutral or hold rating by Motilal, Credit Suisse, Morgan Stanley, UBS, Edelweiss, while a couple of them like CLSA, Bank of America and Jefferies have a buy rating on the stock. Back to you.
All right. Thank you very much for that, Abhishek. Let's also listen in to what the Axis Bank management said. We're just playing a couple of bites. Eventually, we'll have the management itself.
The franchise continues to remain very strong. Core operating parameters are strong. Loan growth momentum has picked up, and we had strong loan growth in the quarter across all segments. Financial performance, profit growth strong, but divergences related provisioning has increased credit costs. And from a divergence perspective, that drove most of the slippages. And because of that, though, the size of the stress pool has come down a lot, and we expect credit cost normalization around the second half of financial year 19. The watch list is, continues to decline. It's now become fairly small. It's just over 6,000 crores. And at this size, the watch list is going to contribute less and less to overall slippages in every quarter.
Okay, now Axis has fallen 3% already, but should be some more pain, and it will reflect on the bank nifty. We saw the ADRs were down 2%.
Absolutely. No, the point is, what Axis was telling us is that these 5,600 crore of NPAs, which RBI says you should have identified on March 31st, was not standard only with us. It was standard with several other banks. These are 9 accounts. Only 6% has been identified by a couple of banks as bad loans. So what happens to the remaining, the total of those 9 accounts is 40,000 crore. So the remaining 34,000 crore sitting with various other banks will also have been pulled up by RBI. And therefore, we may get more divergences in other accounts. The obvious names that come to the mind could be ICICI, SBI, maybe even yes, because it went through one level of divergence, but clearly the Nifty Bank. So keep that on your radar.
Okay, so Axis could be the stock of the day, but my sense is a close second could be ACC. Nigel, decent numbers.
Well, the numbers look very, very good, Anuj. It came in late in yesterday's trading session. We did see a bit of a reaction. CLSA, they have come out with a note. They're very impressed, as the entire street, with the 18% volume growth. They've also raised their estimates for the next couple of years, and they've upgraded the stock to a buy from outperform. They're also up their target price by around 100 rupees. So that stock should see some follow-through buying. Remember, it's rallied close to around 15% in the last 14 to around 15 trading sessions.
Okay.
All right, Nigel, thank you for that. So that's ACC countering some of the negativity that we're getting from Axis this morning. And perhaps somewhere in the middle, there is Wipro. Anisha is joining in. Anisha, not exactly setting the street on fire, right?
Well, definitely not setting it on fire. And you're right, it is right in the middle, because even the brokerages are split. There have been some brokerage upgrades as well in terms of the earnings estimates, and there have been downgrades as well. But to first tell you the number and why I think they are a bit weak is because the constant currency growth has come in at just 0.3% versus an expectation of around 0.9%. Yes, it is still in middle of the range of what the management had guided, but the street was looking for a lot more. Even if you look at the Q3 guidance, that is a bit disappointing. It has just come in at 0 to 2%, and I was talking to a few analysts before that. They were expecting 2% to be the middle point of the guidance and not the higher end. Yes, of course, Q3 has the seasonality factor to it, but still a bit disappointing. As far as the positive is concerned, the IT EBIT margin is the real standout. The margins came in at around 17.3% versus the expectation of around 16.6%, and the management alluded to the fact that this is all because of operational efficiencies. They also reiterated their target of converging with the industry growth by Q4 FY18 itself. So that target still remains. In terms of brokerages, we have seen the cuts coming in from the likes of CLSA. Others like Deutsche Bank and Morgan Stanley say that the valuations are full, so maybe they have a hold on it as well. Back to you.
All right. Thank you very much, Anisha. And now for a bunch of other stocks that are in the news for results and other reasons, Ronit.
Yeah, so I'll start with nuclear software. Good set of numbers coming in. Revenue was up 7%, but the margins came in around 200 bips higher. And due to that, the PAT was up 36%. Next, moving on to Tata Sponge, good numbers as expected. Revenue was up 9%, but the margins came around 10 percentage points higher at 20%. And due to that, the PAT was up 72%. Remember that H1 FY18 EPS is equal to the whole year of FY17. And finally, moving on to the bad set, RS Software, bad numbers as expected. Revenue was flat at 1%, but the loss came in around 14% higher at 6.4 crores. Next, moving on to some stocks in news. JBF Industries will be in the news today because the company is in discussion with potential buyers for a stake sale. And remember, private equity fund KKR owns around 20%. This is, of course, reports suggest this. Moving on to Flipkart and Future Lifestyle will be in news because Flipkart is in talks to acquire around 8 to 10% in the company. In going back to you.
Okay, lifestyle, Future Lifestyle. We'll watch out for that stock. Lots of action in retail these days, isn't there? Thank you, Ronit, so much for that. Quick recap then of our top 10 list this morning. The stocks that could start off under some pressure include Axis Bank, of course, that tops the list, then ICICI Bank, SBI, Yes Bank, and the Nifty Bank itself because of the rub-off impact. Wipro and RS Software are also expected to be under pressure. Stocks expected to see some green are Cipla, ACC, Future Lifestyle, Fashions, Nuclear Software, Tata Sponge, and JBF Industries. On that note, we'll take a quick break, but coming up on the other side, plenty of technical ideas and how you should approach the trade setup this Choti Diwali. Ashwini Gujral, Sudarshan Sakhani, and Prakash Gaba joining in.